Hello, I'm Bernard Hickey from Interest.co.nz and welcome to an economic weather report, where today we look at some wages inflation figures, which show wage inflation still surprisingly strong. Inflation in wages in the September quarter from a year ago was 3.6%. Now this is a record since the survey started in 1992 and was actually higher than economists had forecast at 3.4%. A couple of big factors here. Local government wages are growing very strongly. They're actually up 5% for the year. That compares with 3.6% for the private sector. Local government administration was the big culprit, up 5.4%. And we saw health and community services wages rising 5.7% from a year ago. That's because of increases in wages for doctors and nurses and various other health sector workers. Also, to give you an idea of the fastest growth in the private sector, petrol and coal industry workers were up 4.3%. That's with the Pike River development going on in the South Island. Agriculture wages up only 3.3%, and that's a hot sector. So it gives you an idea of how far out of whack growth in the local government and health sectors are. Now the Reserve Bank was looking for signs of a slowdown in inflation coming through before it cut the official cash rate significantly. This isn't a sign of a slowdown in inflation, but some people are pointing out this is a lagging indicator, and we're likely to see on Thursday employment figures which show the economy deep in a recession. People are expecting the unemployment rate to rise from 3.9% to 4.3%, and they're also expecting overall employment to drop by 0.6%. This will show an economy in recession, and people are hoping, some people at least, that this will mean the Reserve Bank can cut the official cash rate significantly on December the 4th by as much as 50 basis points, maybe even higher. But if we see employment figures on Thursday which show the jobs market still going pretty strong, you'd have to say chances of another cut in the OCR by a big amount are less. Overall, what does this mean if you've got a fixed rate mortgage or term deposit? Obviously interest rates are falling for term deposits, so it would make sense to lock in long. If you've got a variable rate mortgage, you're in pretty good shape because those are going to be dropping quite fast. Fixed rate mortgages, not quite so good. Over the next year or two, we're going to see variable rate mortgages fall and at some point be even less than fixed rate mortgages. So shorter rather than longer seems to be the way to go. I'm Bernard Hickey with a special weather report on the economy for Interest.co.nz.